Hello everyone. So today we are going to start with a very interesting topic, that is dividends. And this is given under section 2 subsection 22, and it has subsection of A, B, C, D and E. So basically section 2 talks about the definition. So under section 2 subsection 22 talks about the dividend. So it has all the definition of dividend, what dividend is, what dividend includes, and what dividend does not include. So we, in simple language in law, have studied that dividend is anything which is paid by the company to the shareholder. And so why was the need to bring these subsection? The simple way could be to say this is, suppose the company has given cash to the shareholder of rupees 2 lakh, and so this amount would be taxable in the hand of the shareholder under other sources, and the shareholder needs to pay tax on the same. However, suppose a condition when the company, instead of giving the cash to the shareholder, gave some asset to the shareholder. So is this what is included in the definition of dividend under Companies Act? No, it is not, because as per Companies Act, it only includes the payment made through cash or bank. So these are some of the loopholes which could be ways to evade the taxes. So under Income Tax Act, these were brought into picture. So we would get a clear picture once we would get into these sections. Dividend includes subsection A, talks about the asset when the asset is given to the shareholder. First, let us read the section. Any distribution by a company of accumulated profit, whether capitalized or not, if such distribution entails the release by the company to its shareholder of all or any part of the asset of the company. So this section talks about whether the asset is distributed, it would be considered as deemed dividend up till the amount the company has accumulated profit, whether capitalized or not, given to its shareholder. So it is very important to understand the meaning of accumulated profit, capitalized or not, and shareholders, because these are the main constituent of these sentences. So when we talk about accumulated profit, we talk about the profit and loss account profit. We talk about accumulated profit and not assessable profit. So when we talk about any gain or profit, any amount which is included from profit and loss account, suppose we talk about the general reserve, this is created out of profit and loss account. But suppose we talk about the share premium. So share premium is something which is not made from the profit and loss account, so it won't be counted into accumulated profit. So to sum up, we can say that any reserves which is prepared out of profit and loss would be a part of accumulated profit. Similarly, when we talk about revaluation reserve, it is not created out of profit and loss and hence would not be a part of accumulated profit. Then we talk about whether capitalized or not. So in a simple way, it could be said that suppose the company has reserves of 5 lakh, and out of these it has issued a bonus share of rupees 2 lakh. So when we talk that whether capitalized or not, so this bonus of 2 lakh is said to be the capitalization, and when we talk about this 5 lakh, it is the amount of accumulated profit, whether capitalized or not. When we study subpart A, B, C, D, the wordings used in this section is whether capitalized or not. However, when we would study subsection E, the wording is just accumulated profit. This part is missing, whether capitalized or not is missing. So under subsection E, suppose the reserves is of 5 lakhs, out of which the bonus issue has been of 2 lakh. So for subsection E, we would just take rupees 3 lakh, because in that section, whether capitalized or not is missing. So we would take only accumulated profit, which would be 5 lakh minus 2 lakh. I hope this is clear to everyone. And then, so yeah, it would be confusing if we don't know what constitute of shareholder. Is it just equity shareholder or is it just preference shareholder? So for the section 222, we include equity as well as preference shareholders in this word. And then we talk about that. So basically, after reading the whole section, we can understand that when we can draw a balance sheet that would give us a clear picture. Suppose this is equity of 10 lakh, there's reserves of 2 lakhs, there's an asset of 5 lakh, and bonus issued is 1 lakh, which is included in this 2 lakh. So from here we can understand that the 5 lakh amount is greater than whether accumulated profit, whether capitalized or not. So up till 2 lakh rupees, the amount paid to the equity or the preference shareholder would amount to deemed dividend under section 2 subsection 22 section A. Also further, there are certain things that this 5 lakh, suppose the fair value is 10 lakh of this asset. So what we would be considering, suppose the fair value is 10 lakh and suppose the reserves is also 12 lakhs including a bonus of 1 lakh. So in this section, the deemed dividend, that is 222A, would amount to rupees 10 lakh, which is the fair value of the asset and not the book value, because the 10 lakh is greater than the amount of reserves, that is 12 lakh accumulated profit, whether capitalized or not. So yes, under this section 10 lakh would be the deemed dividend under 222A. Further, moving ahead, we can also, there can be one more example of it. Suppose the asset is of 5 lakh only, the reserves and surplus is of 2 lakhs only, and so 5 lakh is greater than 2 lakh, the dividend would amount to 2 lakh, but where would be the 3 lakh for? So in the hands of the shareholder, we have read section 56(2) subsection 10. If it falls under this section, then the remaining 3 lakh would be taxable under 56(2)(10). So the question would be, would this 2 lakh also be included in this 56(2)(10)? But since we have a specific provision, that is 222A, and when we have a specific provision, we need to follow the specific provision over a general provision. So the 2 lakhs would be taxable under 222A, however the 3 lakhs would be taxable under 56(2)(10) if it falls under the definition of 56(2)(10), that is property. So I think section A, everything that it talks about, we have been very clear about it. Now let's move to subsection B. So any distribution to its shareholder by the company of debenture, stock, deposit certificate in any form, with or without interest, and any distribution to its preference shareholder of the shares by the way of bonus to the extent to which company possesses accumulated profit, whether capitalized or not. So this section talks about that the shareholder, if they receive debenture, deposit certificate, debenture stocks, and instead of the dividend, so suppose a company says that, okay, instead of paying a dividend, we would be paying you via debentures. So this could be an other way around, and so the tax maker thought this could be a great loophole and hence considered if the company pays any amount via debenture to any person, like the shareholder could be either equity or preference, it would be amounting to dividend under 222B. And also to the extent of accumulated profit, whether capitalized or not. I hope this sentence remains same for A as well as B, so I hope it won't be necessary to explain it again. But however, when we come down to the second sentence, it states that any distribution to its preference shareholders by the way of the bonus. So when it talks about preference shareholder paying any amount of bonus, so the question remains, why does it not talk about equity shareholder? Because the company could also state that the company would like to pay to the equity shareholder via bonus instead of paying dividend. But the thing is that equity shareholder is the owner of reserves and surplus, and preference shareholder do not held this reserves and surplus. Also, when the bonus is being issued to the equity shareholder, there is no outflow of any asset, so this won't amount to 222B. However, when preference shareholder are issuing bonus, the preference shareholder are not the owner of reserves and surplus, so it is kind of an extra benefit being paid to the preference shareholder, and hence it would be included under 222 subsection B to the extent of accumulated profit, whether capitalized or not. So continuing with 222C. So 222 states that when any distribution is made to the shareholder of the company on its liquidation to the extent to which distribution is attributable to accumulated profit of the company immediately before liquidation, whether capitalized or not. So under 222C, the important thing which need to be considered is this shareholder does not include preference shareholder. We would explain this concept later in this video. Also, it consists that it states that on liquidation, when the company distributes its asset to the shareholder or gives money to the shareholder, up till the point of accumulated profit, whether capitalized or not, would be considered under section 222C, which means that suppose here's a balance sheet, equity 10 lakh, reserves and surplus 5 lakhs, which include bonus of 1 lakh, asset of 3 lakhs, cash of 12 lakh. Okay, so now when company would go under liquidation, we need to emphasize on the fact that the accumulated profit, whether capitalized or not, should be taken on the date of liquidation and not on the date of dissolution. However, since the asset would be distributed on the date of dissolution only, so the taxability would arise on date of dissolution and not on the date of liquidation. Also, the asset fair market value needs to be considered for the purpose of this section. So we need to read this section along with section 46 of the Income Tax Act to get a more clear picture. So as per section 46, which starts with notwithstanding anything contained in section 45, which means that it is an overruling section, and section 45 is the charging section of capital gain, where the asset of the company are distributed to the shareholder on its liquidation. Such distribution shall not be regarded as transfer by the company for the purpose of section 45. This means that this is saying that if a company distributes any asset to the shareholder on liquidation, then the company would have no implication on it. However, suppose the word asset is specifically used. Suppose the company sells its own asset and gets the money and pays that money to the shareholder. So on under those circumstances, the implication would be there on company. It would only be exempt when the asset is transferred on liquidation. When we read subsection 2, then it states that whether shareholder on liquidation of the company receives any money or any other asset from the company, he shall be chargeable to income tax under the head capital gain in respect of the money so received or the market value of the other asset on the date of distribution as reduced by the amount of asset as divided dividend within the meaning of section 2 sub 22 subsection C, and the sum so arrived shall be deemed to be full value of consideration for the purpose of section 48, which states that suppose the fair market value of asset which is received by a shareholder is rupees 5 lakhs, and the money which the shareholder receive is suppose 2 lakh. However, based upon the previous section of 222C, upon the accumulated profit whether capitalized or not, suppose 222C has arrived at 1 lakh rupees. So we need to reduce this 222C from this, and we need to come to a figure that would be amounting to 6 lakhs, and then we would be reducing cost of acquisition or indexed cost of acquisition accordingly. Suppose that would be amounting to 3 lakh. So 3 lakh would be capital gain. So it is stating that it needs to be reduced by the amount assessed in 222C. So the basic reason for this is because had this amount not been reduced from this capital gain calculation, it would have led to a double taxation. And in income tax, obviously, we do not promote double taxation. So this amount has been reduced accordingly while calculating capital gains. The holding period under this section would be considered up till the period of liquidation. However, for capital gain would be computed on the date of dissolution. So, moving to the next section, that is 222D. Any distribution to its shareholder by the company on the reduction of its capital to the extent to which company possesses accumulated profit which arose after the end of the previous year ending next before 1st day of April 1933, whether such accumulated profit have been capitalized or not. So as per this section, it states that suppose the share capital consists of 1000 shares at the rate 100 rupees each, and the company decide to reduce this to 1000 share at the rate 50 rupees each, and the company would distribute the amount to the shareholder up till the accumulated profit, whether capitalized or not, it would be considered under section 222D. So if I say that the company A has reduced its share capital from 100 to 50, would that amount to the deemed dividend? The answer is no, because I never said that a company would distribute any amount to its shareholder. Until and unless the company is distributing the amount to the shareholder, mere reduction of the share capital won't lead to this section. Also, suppose a company has accumulated loss of 1 lakh and the company is reducing the share capital and paying to the shareholders. So since it already has accumulated losses, so in those circumstances as well, this section won't be attracted. So we are moving forward to section 222E, which is considered to be most important out of all the subsections. So it states that if there's a company and it has a shareholder who holds greater than equal to 10% of the shares and the company gives loan to this shareholder, then despite the fact that the shareholder might would have returned this loan right after 1 day or any period of time, but still this loan would amount to deemed dividend and would be taxable in the hands of the shareholder. This is stated in 222E. The details of this we can understand through any payment by a company, not being a company in which public are substantially interested. It talks about that it is only applicable to closely held companies and not to widely held companies. Whether as representing a part of the asset of the company or otherwise, by the way of advance or loan to the shareholder, being a person who is the beneficial owner of the share. This states that suppose this is a company and Karta is holding the shares of the company on behalf of the HUF. So now, although the HUF is holding the shares of the company through Karta, and the company gives loan to HUF. So since HUF being the beneficial owner of the shares would be liable for deemed dividend under 222E. However, the company when gives loan to Karta, it does not form part of 222E since Karta is not the beneficial owner of the share. This part was not introduced before, but however, after so many instances and case law, this was amended in this section because the beneficial owner of the shares is the one to whom the benefits of the shares are actually been transferred to, and hence the deemed dividend provision is applicable to that person only. Not being shares entitled to fixed rate of dividend, whether with or without the right to participate in profit. This sentence reflects that it is not applicable to preference shareholder, that this section is only applicable in case of equity shareholding. Holding not less than 10% of the voting power, that means greater than equal to 10%, or to any concern in which such shareholder is the member or partner and in which he has substantial interest. So this states that the company, and this is shareholder, and this shareholder has a substantial interest in another company. When we talk about substantial interest, it states 20% or more voting power. So suppose the company, instead of giving loan to the shareholder, gives loan to this company in which the shareholder has substantial interest. So directly or indirectly, it can be for the benefit of the shareholder. So in fact, in this case also, there would be a deeming fiction and 222E would be attracted. And also applicable in case of a partnership firm where such shareholder is a partner, a case of HUF in which such shareholder is a member, AOPBOI, or any firm in which there is a substantial interest by this shareholder, the section would be applicable. To the extent to which company in either cases possesses accumulated profit. So suppose the loan is given for 20 lakhs. The reserves and surplus, that is accumulated profit of the company, is only 10 lakhs, and out of which there was a bonus share of rupees 2 lakhs. So in this we can see that the part whether capitalized or not is missing. So we would be considering 10 lakhs minus 2 lakhs, that is 8 lakhs, if this bonus is included in this reserves and surplus content. So this 8 lakh would be part of the deemed dividend 222E, and also the TDS needs to be deducted for 222E as well under section 194 at the rate of 10%. Till now we have studied what would be part of dividend, but now we would be studying dividend does not include. So we can talk like we would start from any distribution of the share pursuant to demerger by the resulting company to the shareholder of demerged company, whether or not there is a reduction of the capital in demerged company. So when we talk about demerger, suppose this is a company and a part of it has been demerged. This is company A and it has been demerged to company B. Suppose the share capital amount rupees 200 before demerger, and after demerger both the company hold 50 rupees share capital. Also, the asset of this company is to be distributed proportionately as to the portion of B. So now when the company A there has been reduction in share capital, it could be considered in this subsection of 222D, reduction of share capital, and this reduction in the asset could be considered as distribution of asset as per 222A. So by including this section under what dividend does not include, it states that in case of demerger, these section of 222D and 222A won't be attracted. Then part 3 is talking about any advance or loan made to the shareholder or to the said concern by a company in ordinary course of the business where the lending of money is the substantial part of the business of the company. So it is stating that there is a company and its ordinary course of business is to lend and grant loan. So when we talk about ordinary course of business, we talk about 50% or more of the times the business of the company constitute of lending money, and when the company is in that business only and it is lending money to any of its shareholder in ordinary course of business, which means that suppose the company lends interest rate of rupees 80 of 18%. So if the shareholder is also getting the loan at the rate of 18%, it would be considered an ordinary course of the business. However, if the shareholder is receiving with an interest of suppose 5% or without any interest, so these won't be considered an ordinary course, and it then the deeming fiction would be arisen under 222 section. So yeah, this states that when it is. And for these two subsections, we have already discussed earlier that in this section it states that when the bonus shares are issued to the equity shareholder, it won't constitute as deemed dividend, because when the bonus shares are issued to the equity shareholder, the equity shareholders are the owner of reserves and surplus, and there is being no outflow of any asset in this case, and hence would not be considered as deemed dividend. As per subsection 1, it is stating that in clause C and D, the preference shareholders are not included. So as we have already discussed in the above sections, I think this whole subsections and sections is very clear, and if you people have any problem in any of these sections, you can just comment on this video, and please do like the video so that I can get more motivation to make such videos further.